Welcome, everybody, to this week's podcast episode for the Financial Freedom for Physicians podcast. I'm your host, Dr. Christopher Liu. And as you know, we talk about 4 different types of freedom: time, financial, location, health freedom. And in that light, I'm always interviewing people that are doing things very on the cutting edge, changing the world, making an impact. And I record those conversations and want to share with the world. So today we have a financial expert. His name is Mike Ringel, and he's going to talk all about finances for high-income professionals, how to protect it, especially in these times. You know, so many scam artists and bad actors. I'll let him introduce himself. So, Michael, welcome.
Well, good afternoon. Thanks for having me. I appreciate it. My name is Mike Ringel. I'm a CPA, but I don't practice anymore. Retired income certified professional, and like many professionals listening to this, I have a lot of letters I could put next to my name because I love learning. You know, I was taught at an early age by my dad, who was a college professor, that, you know, you never stop learning. So I always seek to find the best advice, the best knowledge, and then, like you, try to, you know, share that with the world. So I'm really, really happy to be here.
Yeah, this is great because, you know, we were talking backstage and, you know, we have similar goals, and we're trying to, you know, prevent the little man from getting killed. It seems like, you know, only the top 0.1% is able to thrive today. So let's talk about this idea, dispelling the myths of investing, the story of investing. I'm curious what you have to say about that.
Sure. Yeah. So first, let me just start off with why I exist in this business. My purpose is to empower families to experience their own purpose, freedom, and abundance. Right? The problem I find today is a lot of people are coming from the world of scarcity. And I try to coach and inspire and teach people to empower them to come from a place of purpose, right? Freedom and abundance. And myself and my team, we accomplish this by inspiring and coaching families on the truths of investing and designing a plan that supports their purpose. So the first thing we really do is focus on, you know, what is your true purpose for money, right? A lot of people, you know, listening to this podcast got into medicine because they love medicine. They love helping people. And that's their purpose. And they get rewarded financially for it, which is great. But a lot of times people make decisions that really doesn't align with what their purpose is, or their purpose changes over time. So one of the things that we do is we hold courses free of charge that we teach people and we coach people on the truths of investing. And the first thing we do is we start with the myths of investing. And I'm not going to go into the detail, but there are 4 myths, right? The first myth is that there are people out there who can consistently pick stocks. I mean, have you ever gone to a party where somebody says, hey, you know what? You should really buy X. They can't do it on a consistent basis. Now, what we're seeing today, I mean, literally over today in the last few weeks, is the implosion of crypto and FTX. And I'm sure you've been to parties and I've been to parties, and people have said, hey, you know what? You need to take your money and you need to put it here. And to me, that's speculating and gambling. You work so hard for your money, right? People can make one really, really bad choice in their lifetime, and they could lose 40 years of their life work. Stock picking is the first myth that somebody can actually do it on a consistent basis. The second one is what we call track record investing, meaning that just because somebody invested and made money in the past doesn't mean they're going to make money in the future, right? We've all heard the phrase, you know, past performance is not indicative of future return. But the problem is that that's what people do. They look at past history. They say, wow, these companies, these mutual funds, these investments have gone up significantly, but there's no guarantee that they're going to do the same in the future. We need to focus on the myth of track record investing. The third one is market timing. Like, nobody knows when to get into the market, when to get out of the market. And I mean, I could tell you countless stories on people who've tried. Maybe later we'll talk about that a little bit. So, you know, if you're invested in the market, you need to stay in the market and not time it. And then finally, it's cost, right? The cost of investing, the cost of funds, things that you don't see in portfolios, those costs can hurt you. So we talk about those 4 myths, we dispel the myths, and then what we do is we talk to our clients and we coach people on the two screens when it comes to investing. Either it's speculating and gambling, it's implementing Nobel Prize winning, empirically tested portfolios that we know work. And because your audience is pretty well educated, I'm sure that they want to go with the education, the math and science around investing, not the speculating and gambling. So those are the myths.
Yeah. Yeah, that's interesting. Yeah, it's quite when you talk about, these four myths and really for, especially for high income, they're just looking for a way to get passive income. They can safely, put away their money. They don't have to worry about all these, implosions and people stealing their money and all of that.
Yeah.
What are some of the 5 huge mistakes investors are making right now?
That's a really, really great question. I think the first mistake that they're making is not being educated on it and leaving it to somebody else to make the decisions for them, right? Investing really isn't that complicated, right? There are really 4 key things that you need to think about. Number 1 is you need to own stock, right? And you need to balance it with bonds or fixed income. So when we build a portfolio, we want to make sure that we own all the different asset classes, right? And we want to use bonds to be able to manage the volatility, right? You're not going to crush it, right? From an income point of view, owning bonds or fixed income, but it's going to stabilize your portfolio, right? So number 1 is you own a portfolio that consists of equities and fixed income. And one of the things that we do that's a little bit unique is for that fixed income portion of the portfolio, we use a lot of times whole life insurance for a lot of reasons. Number 1, you have the significant death benefit. Number 2 is you have the buildup of cash value, and that cash value grows like a bond. And the cash value in life insurance is a non-correlating asset to the markets, meaning that it doesn't matter what the markets are doing, they go up or down. Cash value life insurance always goes up, right? It can never go down. So now you have this asset that's non-correlated to the market that you can use as part of your bond portfolio. Number 2 is you want to be globally diversified. Since we never know which asset class is going to be the best or which is going to be the worst, we own them all. When I and my team get financial statements from our clients and we analyze them, we actually have a system called a portfolio MRI, right? Where we can actually take a look behind what people actually own in their mutual funds or ETFs or their stocks. And what we discover is that most people are highly concentrated in the S&P 500. 50 to 75% of their money is just in the S&P 500, which is only 500 of the largest US companies. So what that means is when the equity markets in the United States goes down, like it's currently doing this year, their portfolios go down significantly. And we know academically, and we do this through our coaching, we know that the premium in return comes from owning small and value companies. The problem is most people don't own them. And the reason they don't own them has to do with something called familiarity bias. They're familiar with the S&P 500. Everybody owns it. It's a great index to own. But if you own too much of it, then you're susceptible to the significant possible loss that's currently going on today. So number 1 is you need to own equities and you balance the portfolio with fixed income. Number 2, you globally diversify. And most importantly, you rebalance your portfolio. What I mean by that is every quarter, what we do is when, let's say you have 50-50 portfolio, which is 50% stocks and 50% bonds, and the stocks go down and the bonds go up, what we do is we have algorithms that sell what went up and buy what's on sale. It's human nature to do the opposite. When people open up their statement and they see that stocks went down and bonds went up, their initial instinct is to sell the stock because if it went down, they assume it's bad. And then they buy high. And we've all been taught what we need to do is you buy low and you sell high. So for example, what happened right after COVID or the beginning of COVID in April 1st, let's say, of 2020, when stocks were declining significantly and bonds were increasing, what our structured portfolios did was they sold the bonds, around $320 million worth of bonds, and bought the stocks that were on sale to get it back to 50-50. Then over the next year and a half, the markets took off, and the number one asset class in that time frame was small value companies. It wasn't the S&P 500. And those people who own that asset class got rewarded handsomely for it. Again, it's based upon the math and science and the academics of investing, not speculating, gambling, and trying to forecast the future. And finally, it's managing your behavior. What people hire us to do is to coach them to manage their behavior, especially in markets right now where you don't panic. If you hit a little turbulence, you're not going to jump out of the plane. And the same thing with the markets right now. Markets go up and markets go down. We have data that goes back to 1926 as to what happens after markets go down. Well, they go up. When they go up, how much they go up, nobody knows. And if they try to tell you that they know, they're just forecasting and guessing. So those are the things that you really need to think about is own equities and fixed income, globally diversify, rebalance your portfolio, and have a coach to work with who can manage your behavior such that you don't make a mistake that crushes your 40 years of work that you've done to get to the point of retirement.
Yeah. Very sound advice. And when you're talking about managing behavior, you have this idea of mind over money and the war over our mind for our money. Elaborate on that?
Yeah, I mean, if you just take a look at what's going on in the news, right? You turn on the TV, you turn on Fox Business, you turn on CNBC, and there's a war for our minds, right? They're trying to capture our attention, and they do it using fear, because fear sells. So it's going to be really bad. We're going into a recession. We may be in a recession. Who knows if we're in a recession yet, right? They talk about all these different things because the media, what they need to do is they need to get eyeballs to turn into their channel, because that's how they sell advertising and make money. When the war for our mind has to do with influence, because if you turn into these media TV stations, then they start to influence your behavior. If you take a look at somebody like Kramer on Mad Money, that a lot of people follow, he's been having a lot of problems when it comes to making his choices on what to invest in. He's an entertainer, right? People tune into him because they love the bells, the whistles, you should do this, the honking, the sounds. But when you take a look at his advice, it's really not on par. And a lot of people do that. They look at, let's take a look at what's happening with crypto, right? Yesterday, a class action suit was filed, and people are suing not only FTX, but they're suing all the celebrities who are trying to influence people. Tom Brady, Shaq, Stephen Curry. There was a lawsuit by the SEC against Kim Kardashian because I think she was fined about $1.3 million because she put out a tweet a couple months ago, or maybe a year ago, about about a crypto coin that she said she was buying or other people should buy, but she never disclosed that she got paid $250,000 for that, right? And innocent people like yourself, myself, the listeners, we get sucked into this, we invest, and then we get hurt. And as I mentioned to you, backstage, that you could work your entire life and you make one really bad mistake with investing, right? In fact, there was I think it was Business Week, a surgeon up in the Boston area took his whole retirement because somebody told him he should put it into crypto. And now it's all gone. Now, it doesn't need to just be crypto. There are other different assets that can immediately, quickly go to zero, but that's speculating and gambling. So there's a significant war for our minds that we need to be aware of. Think about what we call the Wall Street bullies, right? You have gurus, you have you have people who are telling people what to do and try to guess. And then there are these huge con men. I mean, it could be what we were just experiencing with FTX, but there's Ponzi schemes, there's Madoff. I mean, if you take a look at what happened with Madoff, really significant investors, sophisticated investors lost a lot of money. There were hedge fund managers. There were hedge fund managers that killed themselves. So if you don't think this is about life and death, I mean, this is really serious. And so a lot of people say to themselves, it's never going to happen to me. I mean, I'm sophisticated. I'm a physician. I'm very intelligent. I know a lot of things, but you're susceptible. I'm susceptible. Everybody's susceptible to listening to people who we think know what they're doing without any evidence whatsoever. And that's how you make one mistake, everything you've worked for, your life's work could be gone. It's heartbreaking when I hear these stories, and they happen every day. And I'm sure you hear about it all the time as well. I think I lost the audio.
Yeah, it's been a very interesting conversation. You've given so much tips and wisdom. Ultimately, we're here to, make people more aware of, what's going on. And, it's all about trust, especially with your finances. And, I think today's age, you really can't trust anybody. So you have to always trust but verify. So,
that's a really great point, right? It's funny because we actually have a coaching session called Verify, where we actually talk about, verify what you're purchasing and verify the returns. If you go to, the work that we do, right, we have audited financial statements, and they're audited at the highest level. It's called GIPS auditing, where only about 2% of all financial portfolios are audited at this level. And you need to verify the returns, and you need to make sure that you know what you're doing. The problem is, or the challenge is, that you're so busy, I'm so busy, right, that you're so focused on what you do best, which is making money, that a lot of times people don't spend the time to learn this. So one of the things that we do is we actually hold a 2-day course called the American Dream Experience. Imagine spending 2 days with your peers talking about investing, learning about it, but starting with what's your true purpose for money, right? I mentioned before that, my purpose is to help people experience purpose, freedom, and abundance. So what's your purpose for money? And once you discover it and then you share it, then all the financial decisions that you make are going to be revolved around what your purpose is. So during that 2-day course, right, which is actually a free course, if you qualify, what I mean by that is if it's something that's really going to have an impact on your life, and we do it virtually, and we also do it live in Scottsdale, Arizona, but then you align your investing decisions based upon your purpose. So if you're, as I mentioned before, the 2 screens that you have around investing, which is speculating and gambling, if that aligns with your purpose and who you are, right, that's one thing. But if it doesn't, and you align more with the academics and the math and science of investing, when you make decisions here, you're going to live in a world of abundance, freedom, and power versus anxiety, worry, fear, which is a world that most of us don't want to live in. I'd be more than happy to, invite people to come explore that course, talk about it a little bit more. But, imagine taking 2 days, investing 2 days out of your entire career to never have to worry about money again. That's what we do for our clients. I'm sorry, could you repeat that? I think I lost the audio again.
Yeah, so thanks so much for coming onto the show and dropping so much nuggets of wisdom. Thanks so much, and we look forward to. We appreciate you coming onto the show.
Oh, my pleasure. Thanks for having me. I hope I hope I was able to just share 1 or 2 things that going to be really helpful for your audience.